Privilege and an honor to spend this time with you. My name is Michael Leidick. I am the founder of backtothefuturetrading.com. And if you want to make sure there's somebody here, it's me. It's me. Thanks for checking in with us today. I appreciate you hanging out with us this afternoon. We have a pretty jam-packed webinar today, a lot of ground to cover, a lot of markets to look at, a lot of myths to debunk, how markets are really orchestrated shows, I guess you would say. There are wizards behind curtains who have plans. And nearly 13 years ago, we wrote a piece of code. We undertook a journey to print our own invitations to the country club party, as it were. And today, one of the most, I think, incredible things we'll see hopefully by the end of the webinar is that it doesn't matter if you like me. It doesn't matter. Anything in this room on this side of the microphone really doesn't matter in terms of what I think or perceive or believe. It's really about whether or not the times we published and disseminated to tens of thousands of traders in our social media campaigns and emails, if that information was relevant or useful and or profitable potentially 2 days later. So without further ado, I want to get started here. Tim, I'm glad you like what we're doing with our tools. Jerry, it's great to see you here. I will say hello. Kimberly, good afternoon. I hope you had a brilliant sales and engineering software-y day today. Brian, pause and I'll bring you on over to the organizer side of things. Hola, amiga mía, ¿cómo está usted? Today was Mexican restaurant day. I had a shrimp fajita lunch special, and my beautiful esposa, she had tacos al pastor. Jean Robert, good to see you as well. Hey, up in Canada, and let's begin. Woo! We are the only company. We are standing out on a lone precipice. Day after day, week after week, going on 13 years, absorbing the fiery critical darts of gurus and hater traders in this industry because we have the audacity, us and our 12,000 lines of warp code, to presume we have some idea what markets may do in the future, to, I would say, assuage some of your hesitation, some of your guru guilt, having fallen prey and victim to heavily optimized marketing funnels and various forms of sales trickery. We understand there's a high burden here today to overcome what for many of you has been historically a very expensive and traumatic experience. Can I get an amen from the peanut gallery here today? Most of you, up until you found us, had contributed heavily to the Guru Donation Fund. And so no British or Russian accents here today, no pedigrees or photos by the beach with my laptop and trophy wife, just the mathematics and the science of it all. So we're going to look at the fact that before the market opened on Wednesday, I sent most, if not all of those of you who are not customers, a link to a page. And I'm going to take a copy of that link and post it into the GoToWebinar chat box dialog if you want to follow along at home and you forgot where your link was. In addition to that, coming from an engineering background, I have an engineering degree from the State University of New York, Stony Brook campus in mechanical engineering. Most of my life, I come from a long line of people with big toolboxes and even bigger ideas. I love building things for people that help them do their jobs easier. The majority of the patents that I'm a co-designer or designer with, associated with, are attributed to tools or machines that helped people earn more money and do less work. I believe that's part of why I'm here on the Big Blue Marble. And I believe, having worked through that industry, that there's really nothing random about how a machine moves, how the universe is constructed, whether you're a creationist or a naturalist. There's something ordered about it when you look close enough at the system. And so what we're trying to do here is help you understand that even if you don't see the patterns right away, the tools exist to help us disseminate the information. Even if something looks random and chaotic, there is probably, especially if it's based in some natural substance, order inside of the chaos. It's one of the reasons why people study chaos theory. There are patterns in complex things like weather movements and ocean currents, all sorts of disciplines dedicated to finding those patterns. And week after week, I use this example of, I should probably update it every once in a while. As a matter of fact, I will for next week. When you look at this chart, you just sort of see an uptrending market here in, I believe this was oil back in the April contract. But if we spent probably an hour together, you and I, with a piece of yellow legal notebook paper, I would help you see that there was a pattern in this data. And that, Darcy, if we looked close enough and hard enough and spent enough time together with the presupposition that patterns exist, we might discover that for some reason or another, 5:30 Eastern was an unusually high probability time for up movement in crude lately on this chart. If we presume there's a pattern, we may find it. And if we find it, we can project it forward into the future. I live in North Carolina, and one of the places that we like to visit when we're tooling around on our adventure motorcycles on the weekend, pretending we are some type of movie star, is a dam not too far from where we live. And this dam actually generates electricity. And if you go there and you sit there with a watch and a piece of paper, one of the things you'll start to notice when you look at the Baden Lake Dam is that they open the spillway. They open the spillway. And when you look at the water pouring over the edge of the spillway, there's a very large amount of water. Let me come up here. Coming through these channels. It looks a lot like this. And so if we sat there, Kimberly, with a notebook and a clock, we could actually keep track of when they open the dam and when they close it. And when the dam is open, it's actually generating electricity. It's a hydroelectric dam built by the Alcoa company, used to power their plants in their aluminum foundries here in North Carolina. And so we could keep track of when that dam is going to open, when that flow in the river below is about to increase with power and with force. We could keep track of when those things were occurring and prepare for the next release of water. Hey, Melissa. And so in that sense, we believe markets are not random. I, alongside authors like Jack Schwager, author of the popular book, The New Market Wizards, don't believe that things are just happening with no cause. After interviewing dozens of traders who were successful, Schwager walks away at the conclusion of his book and summarizes by saying, after interviewing everybody, I don't think the randomness is there. There's too many people picking out patterns, said Peter Piper as he picked a peck of pickled peppers. Wow, I made it through the whole thing. Woohoo! So what we've done, again, the audaciousness of it all is we've sent out the times in advance before the markets opened on Wednesday and Thursday. We allowed you, all of you that were interested that aren't a satisfied 4 or 5-star customer on our Trustpilot rating system yet, to look at what happened at those times. Even this morning, you know who you are. I sent you screenshot by screenshot how the markets were performing at those times and trades you could have taken to justify the crazy decision to purchase our software. And today, 2 days after that email, we're going to come and sit down and look at what happened at those signals. Are we crazy? Are our highly satisfied customers delusional when they post their reviews? Are they being coerced? Are their families being held at gunpoint in some Liam Neeson-esque movie in return for their 5-star review? Well, we're going to see here in a second, but I want to make a distinction. There are 2 ways to approach the success rate of the software. Number 1, the raw information. See, there are buy and sell signals encapsulated in these forecasts that we sent out. For example, if we scroll down to Thursday and we look at the E-mini S&P, what is that information trying to tell us? Well, the signals, the raw information, are delineating times that lately are producing movements in directions when they shouldn't be. Meaning, if markets are truly random, there should be no way that a 12,000 line computer code indicator for Ninjatrader can find any times where something is happening a lot at that time lately. So imagine, for example, that at 10:05 for the last 14 weeks, the ES shoots up $50. Something very improbable. The E-mini S&P at 10:05 for the last 14 weeks, the candle closes and Thomas, it shoots up $50, $2,000 per contract. Luis, do you think people would take notice of that? Ladies, gentlemen, do you think on week 15 people would be lining up at 10 o'clock to place their long orders? Yeah, but it's not that obvious. You see, when I believe institutions and banks lie, there's a slight element of truth to it, but just enough that people can doubt the idea. Michael, there's no way banks are in collusion. Michael, if banks were cheating, the SEC would have caught them and shut them down years ago. Michael, trading is a zero-sum game. There's no way they would be cheating because there's only so much money to go around. Unless, of course, your alumni work at the Federal Reserve, who prints out money as much as you need whenever you want it, forever and ever, amen, until a taco costs $14. But that's another story. So this software came back and told us before the market opened on Wednesday to watch for something on Thursday. It told us to watch these times delineated by the blue vertical lines on this histogram for selling pressure. And it's warning us before the market opened on Wednesday that when we arrived at these times, Eastern Daylight Time on Thursday, that Kimberly, there'd be a higher than average probability if the temporal statistical edge was real of buying pressure. So these are times when the dam is opening and closing. Thousands of gallons of orders flowing through the spillway, and then the spillway closes. So that's the difference between a signal and a setup. The signal is just the raw information. And we'll see in a moment if that raw information was valid in any way, shape, or form. So let's go back and take a look at what the second possibility of analyzing the efficacy of these signals might be. What's the difference between a signal and the setup? Well, a setup is the key. It is the key to trading success. Mark Douglas, who authored the novel for traders, the book Trading in the Zone, said, trading is a probability or numbers game. And what we're searching for is a statistically relevant edge. And that way, when we have an edge in the market, we're deploying that edge over and over and over again. And over time, you earn potentially more money than you lose. So what is a setup? A setup is a set of rules. For example, and I gave you the rules to these trades I'm about to show you in the email with the forecasts. We're going to use 120 period moving average. We're going to use 120 period moving average, exponential, Echo Michael Alpha, exponential. Why? Well, it's one that we've been using for 12 years and it works really well. Customer recommended it to us. His father or his uncle was a pit trader somewhere, blah, blah, blah. We started using it and it's just worked out well over the years. A 120 period EMA. If we have a signal that closes in the direction of the 120 period EMA, let's presume that that candle is an up close candle. We're going to enter on the close of that candle. When that candle closes, that time entry candle that's based on the histogram we received before the market opened, that's when we're going to enter. Our stop is going to rest 1.5 average true range values away from the candle low. 1.5 ATR values. Oh, that's backwards. Words are hard. From the low in the event of an uptrend, from the high in the event of a downtrend. And I was speaking earlier with a wonderful person today, and we were saying that in terms of ATR, 1.0 values of ATR is kind of market noise, and 3.0 values of ATR is a full-on trend reversal. If the market moves 3 ATR values against you, market clinicians and technicians alike agree your trend has reversed. So we want to put our stop somewhere in that spectrum, and we try to be as aggressive as we can, and we stick with a 1.5 just outside of market noise. Now, here's the big thing. We're going to hold on to this mother of all pearls until the next selling pressure time. If the dam opens and closes over and over and over again, or with enough frequency that we take notice of that time, we want to have our boats in the river to get as far downstream as we can by the time the dam usually closes. So this setup, in every part of its essence, is a trend entry setup. And we're going to try and see, with the times you've had since before the market opened Wednesday, what happens over time if you enter at the close of the buying pressure signal and you exit by the close of the selling pressure signal with the times that we gave you. Now, the only thing we didn't have before the markets opened Wednesday, Melissa, was a location of the moving average. We didn't know where that would be. We didn't know what price would do. We had a FOMC meeting on Wednesday, all sorts of turbulent, potentially earth-shattering news events. There's a variation of the signal with trend called a crossover. And Tom, if we have that same type of buying pressure candle that occurs and it's on the wrong side of the moving average, we wait until it closes above the EMA. We wait until it closes and kind of breaks the ice and gets above that moving average. If it does, this becomes what's known as, in the trading rules I gave you a few days ago, a crossover trade. It's very imaginative, these names that we come up with. So we enter at the close of the candle, and our stop is underneath the crossover candle. So again, our entry is the close of the crossover candle when it closes above the EMA, and our stop goes just underneath the crossover candle. We're not going to use that original 1.5 ATR stop. It's too far away. The risk is too great. We're not the kind of company that tells you you should risk 20 ticks to make 2, that you should risk $20 in a stock to make $2. Inverted risk reward ratios lead to account bankruptcy. Can I get another amen? How many of you have been a part of a company that promised you a 90% success rate if you only risk 100 pips to make 15? And the first time you hit that stop, woo, pucker time, pucker time. So these are the setups that we're going to use to evaluate the potential profitability of these signals. Now, I've focused on one market today. One person is very special to me in this webinar. They were referred by a successful customer, and they have a very high doubt wall that I'm trying to climb over today. You know who you are. I've been getting ready for this all morning and afternoon. It's all for you. And so the difference between a signal and a setup is, one, we're going to look at what the dots did, what the times did, kind of in their raw, natural state, no constraints. And then we're going to apply a setup, a set of constrained trading rules, discretion-free, no guru influence, no English accents whatsoever, to tell you what you should have done after the fact. Now, I post regularly in a forum on Facebook for the E-mini S&P 500 trade group. There's probably, 6,000 members in that group, and 6,000 or 7,000, and I've been working very hard to maintain a pleasant experience where I give and give and give these times and sort of help people see what's coming in the future. Are any of you here today from that forum, from that Facebook group? If you are, you don't have to let me know. I just want to tell you thank you, and I appreciate you being here today. On this chart, there are a couple things going on. Number one, the dotted white line here on the chart is the present. I know that's really small. That's what she said. And we'll look here and make it bigger if we can. That's what she said. And there. This is the present. And that dotted white line is always moving forward into the future. So the dotted white line is telling us you are here. If we were singing a karaoke song, that would be the line for "Don't Stop Believing." That's the word we're singing right now. Stop singing, Michael. Okay. Everything to the right of that dotted white line is a high probability time in the future. These times do not change. They don't repaint, disappear, reappear. They don't update. They will always, ever, forever and ever, amen, be those times. And you can see as we move forward in the future, there are appointments with the market that we're waiting for. All right, travelers, 2225, blue signal departing south. Everybody on board. Your flight will last approximately until midnight, 20 minutes. These are appointments with the market. Times where, for whatever reason, don't get hung up on the why, the prices go higher and lower with unusual regularity lately. Now, this is the market that usually breaks most people. The ES, we're told by the vendors, is the market we have to trade. If you're ever going to trade, Ray, 100 contracts and get the Ferrari like I have, you're going to need to trade the ES because it's liquid, blah, 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 blah. So in the 13 years we've been doing this and the thousands of people that I've met, most of them have broken their accounts on the S&P index. A lot of them have been breaking their accounts on the NASDAQ, and we'll look at that one in a second. So one of the things I want to do with you is look at the signals first. And I want you to see that it's kind of obvious the market fell at 8:35. It's kind of obvious that the market stopped moving up at 2 o'clock and started going down. It's kind of very obvious the market broke out of that range and kept going higher at 250. There you go. It's kind of obvious that our double top started at 305 and that we fell until the close at 4 o'clock, where now we just kind of leveled off. Would everyone agree that the signals I'm putting arrows on, the raw information, are obvious movements in the direction that we were expecting? Again, if we come back, signal versus setup, what percentage of the time was there an obvious, glorious, oh my God, it's going in my direction right now movement? Easily 6 out of 10 times, right? Would anybody say it's less than 6 out of 10 times? I mean, this is the close of the market. There's a little bit of a kick right there. It's not 20%. It's not 40 or 50%. It's way more than half the time. So way more than half the time, the move we were expecting in the US session occurred at the predictive time and direction I gave in advance to tens of thousands of people. Interesting. Now, if we come back and look at it in terms of a fully constrained, rules-based, mechanical, discretion, no guru, juju environment, what if we just looked for signals in the direction of the trend? Well, first signal occurs at 8:35. It closes below the 120 period moving average and it falls and closes before the open. I don't trade the open. You don't trade the open. That's bananas. By 9:25, we're done with $10 in the potential bank, $500 per contract. The very next signal closes above the EMA 10 minutes later. 10 minutes later, all the garbage is done. We take the garbage out, and lo and behold, the market comes down and hits its stop. As a matter of fact, I didn't have this in the right location. It finishes by 10:10. It's $10 given back. So it closes right here. We're in. It goes completely against us. Horrified, we move on, and we give back the $10 that we just made. The 10:10 signal closes and finishes by 10:30. We put about $5 back in the bank. The next signal with trend is at 11:20. 11:20, the candle closes, and we finish by 1 o'clock with another $7 in the bank. So all of these signals so far were signals with trend, signal with trend, signal with trend, signal with trend. Now, at 1 o'clock, we're below that moving average. We're below it. We're way below it. Some of you are counter trend traders. I'm not saying you shouldn't trade counter trend. In fact, a lot of our customers will use a stop just underneath a counter trend candle and test it out. So Kimberly, they'll put a stop right there if it's counter trend and see if they can catch it going the other direction. That's not my setup though. It's easy to say those things after the fact, and it's one of the reasons why gurus do so well. Nelson, if you attended my super titanium ultra special weekend webinar at my house in Palm Beach, I'll show you my secret guru entries, and I would not have taken that short. I would have waited for this long at 1 o'clock. And in fact, I took that trade on my invisible third monitor that you can't see. That's what most of us heard. So I referenced the rule that I gave you in advance. And Nelson, can you see that the candle actually closes above the moving average? Right here. It happens right here. And that's where I mark the trade. The stop goes right below the candle at 44.64. That's as much as I'm willing to risk, just like the diagram we drew. And if I hold on with my little crossover stop in place, we end up finishing, look at that candle. Ah! That's what happens. It goes right up. Kimberly, they had an appointment with the close of that 2 o'clock candle, and all those bastardos started taking profit. Every single one of them. While everyone else was buying, the institutions were selling for that whole window of time. Now, Nick, what are you and I and all the other customers with the software waiting for after 2 o'clock? When do our lips start quivering a little bit? When do all the customers start to salivate? A little tiny tendril of saliva glistening in the corner of their mouths. Oh boy. And you hear those steel gears turning up in the dam. You see those spillway doors starting to trickle open. You're at the top of the range from the consolidation. It's tap, tap, tapping. Oh, here we go. Here we go. Splat. And at 250, up, 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 and we're out. We're out by the close of the 305 candle. That's historically when the dam closes. Lately, are these times going to be the same times forever and ever? Amen? No. That's one of the reasons why 90 out of 100 people who see this webinar don't believe it. They have a bias that says this can't work. The times, everyone would know the times and the whole system would break down. No, the times change. They're like a sand dune at a beach. It moves ever so slightly every day. A little closer to the water, a little farther away from the water, a little higher, a little lower. The sand dune is always moving. I believe banks are always altering their times a little bit. And so at the end of all this, using the times that I gave everybody, the software gave them to me, I gave them to you. If we add up the signals, 10 plus 5 plus 7 plus 14 plus 17 minus 10, that's 43 probable hypothetical dollars. The ES is $50 per dollar move in the market. That's 2,150. If we multiply that by 0.8 for slippage and commissions, it's about $1,700 in one day. If you trade with the micros, that's $170 in one day. Now, let me ask you a question. And I want you to see how ridiculous this question sounds, even as I say it after 13 years. So what you're saying is banks rig markets. Times at recurring times lately, moves occur. If we trade those times, which are futuristic, they're profitable. That's kind of what we're seeing here, isn't it? 60% of the time, the moves did exactly what we were expecting at the exact time we were expecting them. The signals. You get in a trade and it goes in your direction and you go, holy cow, this feels different. I'm in a trade that's going in my direction most of the time. Woo! So what are the advantages of this? Number one, it's proactive versus reactive. When you don't trade with leading indicators and you get sucked into the lagging indicator vacuum, their marketing funnels, you're slowly developing a PTSD. When soldiers return from war, I have a friend up the street who served in Iraq and Afghanistan. He explained to me what happened at the Battle of Anaconda. And when he came home, he's only told the story to a few people. He wakes up, Luis, in the middle of the night when he first gets home with his hands around his then newly married wife's throat. Traumatized. Every time he said someone drops something in the house, or he hears target practice in the woods of our rural town, he just tenses up. And when you trade with lagging indicators, you're tense, but it's not as though the tension goes away. It lingers and it grows to a steady state where you're so tense most of the time. Stop me if you've heard this before. You experience what's known as analysis paralysis. And your brain says, it's going to go up right here. It's going to go up right here. I bet a kidney, it's going to go up right here. And you sit frozen like someone put something in your drink at the bar. I was going to say something else. You're frozen. Your finger won't push the button. And then, Luis, you watch the trade go up, 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 up. And it's 2 mortgage payments away before you have the courage to get in. You get in, and then it goes down, 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 down. You cry and fall into a fetal position on the floor. My wife actually found me 13 years ago in the closet with my hand on my chest, crying in tears in our closet. True story. Tried to buy in on an FOMC report day with an old computer. And when I thought, Melissa, I had gotten out, it hadn't gotten out yet because of my graphics card. And so I shorted it twice. I didn't think the contract had been filled, so I hit sell a second time. And then the market went up, 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 up before it went down, 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 down. And I almost lost $14,000. I'd only lost $700 by the end of it. Crying in the closet. Are you okay? No. Proactive versus reactive. Any questions about this? Because we already have the times right now for tomorrow. I'm not going to show you all of them because the first dance is free. But I already have the times for the London and US session for tomorrow right now. Interesting, right? If we do a cursory examination and we come back and look at markets that everybody's trading, we can see what happened in crude futures today. Kimberly, was crude futures pre-planned or completely random today? Tom, did we fall in a 60 to 70% window of expectancy? Did the market go up and down at the times I gave thousands of traders in advance from the software, 12,000 lines of engineering code, getting out ahead and warning us where the landmines were? You honestly don't have to believe a word I say. You can go back to the website and you can look and see what was supposed to happen, allegedly, in these markets at these times. I'll just show you a few of the times so you can see that I'm not lying to you. 1042, 1042, 954, 954, 903, 903. What is going on? You mean to tell me for 2 years I've been sitting here with my crazy whack-a-mole stochastic MACD low lag Jurek RSI kumbaya indicator, chain smoking, hopped up on caffeine, listening to 5 chat rooms going at once, 15 free trials rolling in the background, and this was going on? Yes. That's what I'm telling you. And you don't even have to believe me because it's there. And I had nothing to do with it. If you took 5 minutes and we looked at what was happening in the world, the largest investment banks in the world are manipulating the markets you trade. They're not even hiding it. JP Morgan's paying $1 billion, nearly $1 billion, Dr. Evil, for manipulating precious metals futures, among other things. Don't even get me started on foreign currencies. They're all getting caught. How do you spell Deutsche Bank? Just type the name of the bank and the fines. You don't have to look very far. And as I've stated in webinars in the past, we did the math. We actually discovered they pay $1 on average for every $3 they earn. So if you see JP Morgan $3 billion profit this quarter, they paid $1 billion in fines. Would you do that? If you know you could cheat on your taxes and you saved $100,000 on your taxes, but the fine was only $30,000, that seems like a pretty good deal. And if you couple that evidence with what I'm showing you here today, why are you trying to trade like a knucklehead? This works, by the way, on larger time frames. If you're an options trader, for example, and you want to trade SPY or QQQ, or you're looking at equities or cryptocurrencies, you'll see that the time frame really isn't important. And as we kind of move from signal to signal, it's the same thing, but on a much larger time scale. This could be a 5-minute chart, but it's a daily chart. And what peeves me is I know how these guys work. They're gangsters. Kimberly, look at the stop run near the signal time where we're expecting the banks to manipulate the market and go up. Look at this wick right here. How many people lost their life savings in that wick? How many people couldn't go to Disney World that year because of that wick? How many people had to tell little Billy he can't go to state college, he's got to go to community college because dad bet it all on a long and then a short and then a long. And none of this has anything to do with the news. I'm a question, would your system work without you? Would the time show right years later? Connor, as soon as the time populates on the chart, it is locked in, carved in stone, never disappears. Whatever the data came in for the analysis is what that time will be 5, 10, 15 years later. So if you and I got in a time machine and we went to 2032, if the world was still going and Putin hadn't blown us all up by then, and we got a data feed for 2022, my chart would look identical. Because if you build the indicator to work any other way, it's impossible to back test it. And if you can't back test it, then we don't want to sell it. If you can't back test it and forward test it, how will you know what your statistical edge is? Unless we want to rip off as many customers like you as we can, get a fast buck, change the name of the company every year, come out with a new tool, use our mailing list from our next pop-out release. Doesn't matter who's here. Doesn't matter. So that's what's going on the ES. We're expecting some selling pressure right there. If we come down the list, we can take a look and see for crypto, we've got the movements for Bitcoin. These are Bitcoin futures with the, I had the March contract up here for some reason still. We can come over BTC 0622 and I can update that chart. This is an old analysis. And if we scoot that over, you can see we can look for Bitcoin signals on a daily chart as well. I also gave out times for Ethereum on a 5-minute chart before this webinar on Tuesday. And again, I want you to see what's taking place at the Ethereum times. Again, 60% of the time, the signal is going exactly in the direction we're expecting it to. Not all of them. It's never going to be all of them, right? But about 60 to 70% of the time, the move that we're expecting is occurring at the time, a time and direction that I gave you on Tuesday afternoon. So we have this advanced notice now, and as we move forward in the future, these are the next times for Ethereum. And Connor, I don't have to be here to do any of it. This company's been in business for 13 years, and it doesn't matter who's saying what about anything. The code is the code. If we look at Ethereum right now, on the daily chart, at my split, we actually have what's known as a pattern 5. It's an advanced signal. I taught it to a wonderful person earlier this morning. And Kim, if you remember what I was teaching you earlier, there's actually a book in your handout section if you want to open it up with me. A pattern 5 is a signal time where the opposite is expected to occur. And if we go down and look on Ethereum, I marked this chart up so that next week and the week after, you'll remember what I said was going to happen. On a pattern 5, Kim, this is what we're expecting to see. And even on a daily Ethereum chart, this is what we're expecting now into the coming days and weeks until we get to the next date, which is April 10th. Okay. If we come down and look at a few stocks, we can look at Baba. A lot of people are trading Alibaba right now with all of the problems in the world with COVID. We're currently in a put phase. We're shorting Baba, and that is expected to last until April 24th. Again, if you're a stocks and options trader, or if you're an investor moving funds around from positive to negative, from longs to shorts, you can use this tool and have a clear understanding of when something is likely to happen. One of our customers owns an engineering firm in South Africa. He actually uses this on his country's currency to know when the value of it is about to rise so he can purchase equipment overseas. Uses it as a hedging tool against his currency. I actually created a separate workspace for equities. We have a lot more customers on the equities front right now. I've got Ford, Bank of America, Twitter, Apple, Tesla, Alibaba, Nvidia, and AMD on the chart. If you want to take a quick look or a screen grab and see what's expected next and what was expected in the past. In relation to that, AMD coming into a selling pressure time, Nvidia 3 or 4 days into a selling pressure window, Apple in a selling pressure window. Tesla had its run up. I told you guys about it on March 25th and said it would last until March 30th. There's our double top stop run with an engulfing bearish candle to the right. Baba, again, we looked at in addition to that over on the left. So we can use this for futures, we can use it for equities, we can use it for cryptocurrencies, we can use it for forex as well. And then the coup de grace, the piece de resistance, the market that kicks everyone's ass. Everyone's ass gets kicked by this little expletive right here. The E-mini NASDAQ. Now, Kimberly, this is a very intimate moment between the two of us. Remember this chart that I've been marking up for you all morning, and I apologized for sending you all those stalker emails? Are you here, Kim? I went back and I added up all the signals with trend that I've been showing you all morning. And Kim, I made a special spreadsheet for your analytical mind. And I want you to see from 7 a.m. until 3:30 Eastern, there were 35 signals. There were 35 signals in time. If you started with a $10,000 account balance and you took every trade from 7 o'clock until 3:30, the end value was $16,285. $16,285. In addition to the spreadsheets that I sent you from Aurora over the last 90 days. That happened with the times that were available on the histogram that was given out in advance before this market opened. The times that you saw on the emails with the screenshots that I gave you. Okay, so if I'm not over the trust wall, I hopefully have a handhold at the top. I hope at this point I've shown you more than any other guru has ever shown. It's important to me when someone refers someone to me that I meet that level of trust and excellence with them. So from 7 to 3:30, using the times that you saw, using the times that were over the balance of the day, this is what happened with one contract. If you traded a micro lot, it was $1,630, just looking for the entries and exits in the direction of the trend. 1.5 ATR stop, enter at the close of the candle, exit by the close of the opposite signal. Winners are on the top, losers are on the bottom. No hocus pocus, no guru juju, just science and statistics. Mark Douglas said there's a random distribution between wins and losses. Our goal, if you're sitting down to trade against the algorithms of the most powerful financial institutions in the world, is to obtain and exploit an edge. If you had a quarter and the heads side of the quarter weighed more than the tails side, and you went out into the crowd and said, I'll bet you $1 it comes up heads, that's an edge. I have a friend, my partner trades the ES, And one of the back tests he did for a customer, because we're not registered trading advisors, I can't tell you about actual results, but I want you to see here over 900 executions. Kim, this is a trend trading system on the E-mini S&P for the full market open from Sunday at 6 o'clock to Friday at 4 o'clock when the market's closed. And you'll see the profit factor is around 1.5, and the expectancy for the Globex, US, Euro, and Asian session was, where is it, 54%. During the Asian session, the most profitable, it was a 1.7 profit factor with a 56% expectancy. And so when I come and I look at your graph, it's the same statistics, trading in the direction of the trend with a leading indicator between a 50 to 55% expectancy, 1.5 to 2.0 profit factor. And you know when the signals are coming. Bigger winners than losers. That's what Douglas was describing in his book, the book that's probably changed more lives in the industry than any other book. You don't have to worry about wins and losses or right or wrong. It's an edge. It's an edge. And so ultimately, as we begin to wind down here, it's really an existential question. What is trading? What are you trying to do? Well, I'm trying to place a bet on what will happen in the future. I am buying a contract based on my assumption that in the future, the contract will be worth more. I am selling a contract short. I'm using puts because I believe the value of this instrument will be lower in the future. And so if that's the case, why are you waltz into the tool store and there's two aisles. Aisle 1 says future signals, leading indicators. Like, nah, I don't want that. Hey, Johnson, where's your lagging indicator section? It's over there. Just follow the sounds of people crying. Trading is a guess about what should happen in the future. It's not about what happened in the past. Banks don't care what your moving average said. Banks don't care what your volume indicator told you about the last 10 bars. Banks don't care. They love that 90% of people are losing 90% of their account within 90 days. Love it. Love it. Gurus love it too. They put together a highly polished presentation, a PowerPoint from 1962. They sit there and they bore the pants off of you. They offer you a free 90-day trial. And at the end of the trial, you've given them tens of thousands of dollars and you're afraid to ask for a refund because the guy says it's your fault. You didn't take every entry. Well, your stops are like $10,000 stops. It was your fault. The answer to the question: do institutional patterns exist in the markets that we trade? Did this provide any kind of an edge? You've seen enough to answer that question for yourself. In the ES, yes. In the NASDAQ, yes. In Tesla and Apple and NVIDIA, AMC, AMD, Alibaba, Amazon, yes. Every day you wake up with your $2,000 computer in your office and you decided you're going to fight Russell Crowe in the sequence to Gladiator. You're going to fight Russell Crowe's ghost that can't be killed. JP Morgan doesn't care. They don't care. You are a meal yet to be fully eaten. And most people will not purchase the software because they've assumed the markets are one thing and they're really something else. Markets aren't markets like we were taught in school. They're casinos run by legal mafias whose bosses go on to work in an unelected government branch called the Federal Reserve. And when things get bad, they print more money. And when things are going good, they print even more money. What's the interest rate? Nothing. Can we invest it in the stock market? Sure. Can we buy homes with it and drive home prices up and price out new buyers and millennials? Absolutely. And then we can turn around and rent it to them for double what they were paying a few years ago? Sure. All right. That's the world you live in, and the one that I fight against every day for 13 years. You can't be what they are and not leave patterns in the data. You can't. They have to follow procedures and routines. They have to. When they're moving money around from account to account, when they're cashing out and paying their customers their dividends, all these things leave a trail. And the software finds the trail. A friend told me about an architect, and the architect designed universities. And Melissa, he told me the architect wouldn't put the sidewalks in when they finished the construction of the buildings. They said they would leave the sidewalks out and look and see where the students were walking naturally from building to building on the campus. Then they would go back and put the sidewalks where people would organically walk, where there was a trail. Then and only then would he commit to the concrete. Our software finds the trails. These people that you trade against never have, never will have your best interests at heart. They are not playing fair. They have a faster connection to the exchange. They have friends in every branch of government, and they never go to jail. Only one person in 2008 in Europe went to jail for the mortgage derivative crisis. One out of thousands of people who developed the tranches and shorted the American dream at its peak when it fell. That's who you're trading against with your lagging indicator tools. That's it. Any questions after my highly polished and extremely intelligent presentation here today? I'm happy you had the opportunity to watch me today. Any questions about anything I've shown you here today, any of the instruments we've reviewed or gone over? Otherwise, I'm just going to tell you how to get it. And those of you who need it the most will go home without it because you're not ready or somebody burned you too badly. Thank you, Louise. We just covered the NQ, Jean-Robert. I went over it in its entirety. We talked about what happened at the signals, and then I showed you what would happen if you applied a trading strategy to those signals over time. In one day, from 7 a.m. until 3:30, this is what potentially, hypothetically, right, your account would have looked like. If you started with a 10K account, you ended with close to 16. That's like a 50% increase. Math is hard. What are the next signals after 5 p.m.? That is the question, isn't it? That is the question. And here's the problem for both of us. We are a for-profit company. We are not a nonprofit. You are a for-profit customer. And so what I want to do right now is I want to show you how we connect for-profit customers with our for-profit business. All the trades were with the trend, yes. So Tom, right here, for example, at 151, the signal we've had, enter at the close of the candle in the direction of the 120 period moving average, exit by the candle at 159. Trades with the trend. I know you are. I believe you, Jean-Robert. And when you buy it, I'm going to call you Jean-Luc because I love Star Trek, and you're going to let me do that because you love me. On our website, cheers, we have products in our for-profit company. And the product that we've been discussing right now is our flagship product. It's the one that 97, 98, 99% of people purchase when they start with us. And that is Tacheon Warp. Tacheon Warp works on minute bars, range bars, tick bars, volume bars, and Renko bars. It works for stocks, commodities, equities, cryptocurrencies, and futures, as well as foreign currencies. Euro, US dollar, pound dollar, dollar Canadian, ruble, peso, whatever you're into, you can analyze and project with Warp. I also want to direct your attention to the Trustpilot review. We leave this open. If you're a customer and you want to leave a review, Ian, who's got a flair for the dramatic, left us a wonderful review last week, 6 days ago. And you see as we move down, these are actual card-carrying, receipt-holding customers. And I can't delete the reviews. I'm not allowed to do anything with Trustpilot other than tell them if it's an actual customer or not, as evident by our very first review, which is a man named Lars, who left us a 1 star. 1 star. So if I could delete reviews, that would be the one that I would go back and delete. I am sad to say that just before Lars left this review, we found out he had a stroke after buying a copy of every piece of software we had up till that point. So there's a story there if you're interested in that story. We have an excellent rating. If you want to leave a review, go to trustpilot.com, search Back to the Future Trading, and let us know how you're doing. That's the program. I'm going to post a link into your GoToWebinar chat box. This is the traditional posting of the link. backtothefuturetrading.com/Tacheon, Tacheon-time-warp. Tacheon is a word that I made up, bringing 2 words together. We are big nerds here. A tachyon in physics is a theoretical particle that moves backwards and forwards in time. A theoretical quantum particle that moves backwards and forwards in time. And then eon, which is a way to describe an endless amount of time. And so we believe our software moves backwards and forwards in time infinitely. That's the name that we've chosen for our line. At the very bottom of the page, you will see what resembles an electronic Willy Wonka golden ticket. Golden ticket that says buy now. If you click on it, a very annoying pop-up window occurs. We have a class for customers that meets Tuesday, Wednesday, Thursday, 8 to 12 Eastern. My best friend and partner in the business, Ron Gardner, runs the class, and he shows people entries and exits in real time while they sit, and he analyzes the market with them using the Warp software. If you're the kind of person who wants a hands-on training experience, you like having someone there in the speaker talking, calmly reassuring you, here we go, here's the setup, here are the qualifications, here's the entry, here's the exit. This is for you. If you don't want that, don't need it. We're still going to train you, and I'll talk more about that in a second. But if you do want it, it's 25% off that monthly subscription $149 a month. Remember, when you're looking at the $149 a month, what I showed you in one day here today. Remember, when we're talking about this class, if you're a customer and you haven't been in Ron's class, remember what I showed you here today. Remember what we saw with the E-mini S&P. That's quite a few shekels right there. So that class is available if you're a customer and you want to participate in it. If you don't want that, go to the checkout without it. You don't have to have it. This is our purchase agreement. Sales are final. You have to have a decent computer. Don't come to the party with a Commodore 64 or an Amiga or a PET computer, those of you old enough to remember PETs. We promise to make sure the software is working bug-free. It is a beautiful cacophony of code at this point, fully documented, operated and worked on and debugged by the finest of programmers. If you try to steal the code or you post pictures of our stuff on other commercial websites and tell people it's yours, that's a big no-no. And if you like to use all caps in your emails when you're angry with our staff and call them colorful names, a few months ago, one of you implied that our executive assistant was having a sexual affair with us. We will refund your money. We don't tolerate abuse or slaps on stage when we're telling jokes. We will eject you from the stadium. If that's cool, if you're cool with that, click the X on the bottom of the screen and you'll see the glorious promised land. I want to tell you there's a couple things here that you get with the software that you don't normally get, that we're not going to continue for much longer, one of which being lifetime updates. Okay. So free is going to be used a lot here. Free lifetime updates. When we make an improvement to the program, we pass it along. You're going to get 2 computer licenses. Share one with your uncle. I don't care. You got a husband who loves to trade? Yeah, let him in. We'll set it up on his computer. You're going to get free training, one-on-one, personalized. When you get the software, it takes anywhere from 1 to 2 hours to go through it with you, step by step. This does that, that does this. Don't push this button. That all happens for free. Before that, you're going to have free installation. You're going to meet with Rachel. Rachel is quite possibly the best person on earth that I've ever met. She's wonderful. She's the reason we're getting 4- and 5-star reviews. She has a heart the size of Kansas. It's monstrous, and she loves working with you, and it annoys her if you have an issue more than you. So free installation alongside of that. We have a free video training archive. If you like to learn as you earn, you don't want somebody bipping in your earphones, watch the videos when you're home by yourself at your leisure. If you work or if you have weekends or mornings free, those are great times to watch the training videos and get started. In addition to that, remember you're working with a company that has a 4.8 out of 5 rating with almost 100 customers so far, and we only have one star review. There is a promo code. The promo code is lowercase WARPOFF. 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 That's going to take $500 off the price, because that's what you do at webinars, Melissa. You offer them a time-sensitive price. Yeah, I guess, why not? $500 off the price of the software that in one session of the NQ, using a very simple trend entry system, a very simple stop, very simple target, hypothetically earned nearly $6,000 today. When you go ahead and you plug that in, WARPOFF, and hit apply, you'll see it takes that amount off. You can pay with PayPal. PayPal has the ability to finance you for up to 6 months, no payments if you want to pay later. You can use a debit or a credit card. You can also do bank transfers. If you want to do that, let us know, and we have wire transfer information for you as well. We do not at this time accept Bitcoin or apples or goats or a percentage of your new restaurant idea. That's not something we're interested in, but we are committed to you. And in addition to that, our undying gratitude. We actually care about your success. One of you in particular, you've heard me speaking to her all session. All I care about is if she purchases today. That's it. I spent my whole day watching the market and the time frame she trades because I want her to see that there's a future that isn't as painful as her past. We fight with our code against these people. We want to make sure you have a fighting chance when you wake up tomorrow, Monday, Tuesday, Wednesday, Thursday next week. We have the times all ready for those dates. Now that you know those times are available, I have a question for you. Why would you not want them? If my personality has no bearing on what took place at the times I gave you in advance, if my political or theological beliefs don't align with yours and we still saw that the program provided a statistically relevant edge over time, why do you care? Right? These are things that are questions for you. Why do you care? If you can know what's going to happen in the future and you choose to not know, why are you here today? Were you curious? Or are you tired of losing? Are you tired of being told lies? Tired of failing? We're not going to stop. We're not going to stop posting these pictures. We're not going to stop doing these webinars until every retail trader on earth has at least heard the gospel of these times. We want everyone to know what's happening. It's your choice to ignore it. But now you know, you have that knowledge in your head. And so tomorrow when you wake up without these times, Monday when you trade, Tuesday next week when you trade and you get stopped out and it goes in the other direction right away, I want you to remember that you saw 6, 7 times out of 10 the market going in the direction you thought it would go in based on 12,000 lines of code, 13 years in business, thousands of customers worth of engineering dedicated to warning you what's probably going to happen in the next 3 minutes, 3 seconds, 3 hours, 3 days. If you choose to ignore it, just be honest with yourself. I like the adrenaline rush. I like talking to all the vendors in the free trials. I like when people call me up and ask me my opinion on Apple stock. I like bitching and moaning at the water cooler about how much money I lost in my silver trade this week. Those are valid reasons. It's your money. You can do what you want. But if you want to make money, after everything you've seen, the experiment that you've been through, I would like for you to be a part of our team. Our customers can help you. We have pro staffers who trade with live money with the software, who've gotten funded accounts with the software, using the software. That will help you. We have people running live rooms showing entries and exits and systems that are codified that will help you. 13 years, excellent Trustpilot rating, thousands of customers. We're not going anywhere. I want to thank everyone for their time here today. Please sign up. You'll make my evening, one of you in particular. If I don't see your order, I'm going to be very, 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 very sad for a little while. The rest of you, I love you. I appreciate you. Thank you for your time here today. I ran a little bit over, but I wanted to cover a lot more markets than I normally do. You win battles by knowing the enemy's timing. This is a centuries-old teaching. You look and you study, where do they go? What are they doing? Where are they going next? That's what I can offer you here today. May the sun shine on your face. May the wind blow at your back. May the valley floors rise up to meet you, and the mountains lay low before you on your journey as you move forward. We wish you health, fellowship, prosperity, all the goals that you have for yourself in 2022. I hope this is the year we can walk through the fog together into a calmer, more peaceful, less volatile environment. But until then, the markets are moving. They're moving really far, really fast, and now is the time to roll up your sleeves. And as they say around here where I live in the Deep South, you make hay while the sun is shining. Make hay while the sun is shining. I've proven to you, predictive times 2 days after the publish, positive expectancies, positive signal expectancies, positive setup expectancies, logged, documented entries and exits, spreadsheets, and all of it was real and had nothing to do with a person. If you're ready for that reality, welcome on board. Have a great night, everybody. Take care, and we look forward to having you as a customer.